At the Vancouver Resource Investment Conference, I'm joined by Mickey Fulp, the mercenary geologist. All right, Mickey, I want to talk to you about the seasonality of the gold price. What are your comments on that?
Well, we've done a lot of work on seasonality of gold and copper and oil and Toronto Venture Exchange, Baltic Dry Index, et cetera, over a number of years. In gold case, 20 years, and we've shown that if you buy gold during the dip in the summer doldrums, which will usually be sometime July and August, buy on that dip and you sell on January 31st, year over year you can make 7% on your money.
All right, yeah, so you just talked about when to buy and sell. What are your pieces of advice for someone who's new in this sector?
Well, in this sector, I suppose you mean in speculating the Toronto Venture Exchange. Well, there's three criteria, really four. Share structure, you want a tight share structure. You want people that have technical backgrounds as CEOs, COOs, et cetera, and have had experience doing this before and have had success. You want a good project in a geopolitically favorable jurisdiction. I favor advanced projects because that's kind of where you get the most bump for your money, and balancing risk reward. And finally, especially during bear market times, now it appears we've come out of that, you want them to have cash in the bank or the ability to raise money without severe dilution.
Now for 2017, what's your outlook on gold?
Well, I'm positive on gold, but it's very much correlated with the U.S. dollar right now. We showed that in a talk I gave today. Since Trump was elected, about negative 0.95, with 1 being a perfect correlation. So, but gold's still got a ways to go. You know, it was up 1366 back in July. Really unusual year in the fact that gold hit its high during the summer doldrums. I don't know if I've ever seen that happen before. But at 12:15 today, it's got a ways to go, and I will probably go on record. I can go on record, I think, and say I expect it to end 2017 higher than it started.
Now you're here at the Vancouver Resource Investment Conference. What's the sentiment like for you here with all the attendees?
Well, it's much better than it was a year ago. If you recall, a year ago, 2 days before this conference started, we hit the all-time low on the Toronto Venture Exchange Index of 474. When I checked it at noon today, it was at 805. That's a nice bump. With Trump being elected, infrastructure build-out, lessening of regulations in the U.S., I think that's really good for industrial metals and oil. So from that point of view, I'm very bullish. You know, we came out of a 5-year bear market. These bear market commodity cycles usually last from 4 to 7 years. I still think we are in a long-term secular bull market, driven by the fact there's 85 million more people on the planet every year, and 25% of those people can't turn a light. They live without electricity. So from that point of view, very bullish on copper. I'm very bullish on uranium in the year ahead.
Very good. Now, just going back to your comment on Trump, you know, Trump can drive the world differently just through tweets. In this year, in this era of uncertainty, what are you advising your followers?
Well, the same thing we've always done is you pick your stocks based on those four criteria. You must do very good, strong due diligence, and don't buy every story on the floor here. There's 200 companies here. Everybody's got a story, but you know, if I walk around, I might find 4 or 5 that would be worthy of my investment and my coverage. So,
right, exactly. Yeah. Now, is there actually anything under your radar at this time?
Well, there's lots of things on my radar. I'm very, as I said, bullish on uranium. I think uranium companies are going to do well here in the next few months. A company I cover right now is Mawson Resources, an advanced gold play in Finland. They went through a long period of permitting difficulties. That's now cleaned up. They got 2 rigs on the property and 2 core rigs and a bunch of basal till sampling rigs, and it's looking good, and we should probably expect some initial drill results, say around PDAC.
Very good. Now you just mentioned.
Let me say that I own that stock,
Right.
and they pay a fee to sponsor my website.
Right.
So I'm highly conflicted, but I'm a long-term shareholder. I've been averaging down for the last year or so, and remain a committed shareholder to that company.
Right. Well, thank you for mentioning that. And you just said PDAC. Now, before that starts in March, what are you going to be doing? What are you looking forward to in the next 2-3 months with your newsletter?
Well, we're working on some more seasonality stuff, and I think the next piece we're going to actually come out with is a 46-year history of platinum to gold ratios since Nixon took the U.S. off the gold standard in 1971. We have that data. We're starting to work on that. I will say, and I've said this in previous interviews, the platinum to gold ratio right now is about 0.8. Only in 4% of the time in the last 46 years has it been less than 0.85, very low. So that's a buy signal for platinum. If you're going to buy physical precious metals, I'd be buying platinum over gold right now.
All right. Mickey, thank you so much for your insights.
All right, thanks a lot, Rachel.